wages have lifted 1.3% in the third quarter. That's the highest level since the wage price index series began 26 years ago. Let's go to the HSBC Chief Economist, Paul Bloxham. Paul, good to see you again. So I guess this goes straight to the RBA now. And what do they do next month for the final time this year?
Well, the first thing to keep in mind is this wasn't a surprise. Like we were expecting, the market was expecting, the RBA was expecting that this was going to be a very strong lift in wages growth in that quarter. And a lot of the reason for that, of course, was the award wage decision that came through, the 5.75% plus the boost, the one-off boost to aged care workers' wages as well. So that was a lot of what gave us that very strong number in that quarter. And if you strip that out, actually the rest of the wage indicator looks around about as though it's tracking about the same rate it had been over the previous quarters. So the main message is it wasn't a surprise. It wasn't a surprise to the RBA. They were expecting it, and they likely took all of that into account when they lifted interest rates earlier this month. So
preemptive.
I don't think this is going to be a new bit of information that gets them to then lift interest rates again, because, as I say, it's something that would have been taken into account earlier this month.
So it was a preemptive strike, basically, Paul.
That's right. So their assessment at the beginning of this month, obviously, was that inflation's still too high, wages growth has got too much momentum, the economy's still holding up, and inflation was coming down too slowly. They then moved rates on the basis of that assessment, and it took into account the idea that we were going to get a fairly solid or quite a strong third quarter wages print.
Okay, unemployment data today, Paul, what are you expecting?
Look, we think that the unemployment rate might edge up slightly, and that's the market consensus as well, to 3.7%. The bottom line here is that the labour market is starting to loosen up a bit. We've seen a slowdown in employment growth. We've seen a large boost to labour supply because, of course, the reopened border is delivering a lot of people into the economy and a lot more workers. And we're seeing the unemployment rate start to gradually rise, but it's only rising very, very gradually. There's a very, very slow loosening going on in the labour market, and we expect that today's numbers will echo that trend as well. Just a very gradual rise in the unemployment rate over a run of months. A slight lift today is what we've got in mind.
All right, Paul Bloxham, good to see you.